For the 12 months ending March 2022, buybacks were at a record $984.6 billion. That's a 97.2% increase from the $499.2 billion spent in March 2021, the same time period. Now, analysts have been saying with continuous increase in share repurchases, this has been a driving force underneath the decade bull run of the S&P 500. Now, with the acceleration of buybacks having been so aggressive, the debate between whether this money should be reinvested into the expansion of capital equipment to benefit consumers or whether businesses should allocate this back to shareholders is a widely contested debate. But first, let's talk about how share buybacks work. Now, this all has to do with how a business wants to allocate their excess cash. Now, with corporate tax cuts in 2017, this has allowed businesses to retain more cash and drive greater earnings power. Now, this greater earnings power and more cash gives greater optionality on businesses' cash, as I've mentioned in previous videos, as you can see in the top right corner. Now, the first thing they can do with this cash is for mergers and acquisitions of companies. They can reinvest it into research and development to expand products and become more efficient. And they can also provide the cash back to shareholders through a dividend. And finally, share buybacks. In the past 10 years, the top 20 companies of the S&P 500 bought back about 1.3 trillion in shares, with Apple being the largest purchaser of shares. So when a company decides to buy back shares, it takes those shares away from shareholders, making the pie of profit bigger for existing shareholders. And this changes a metric known as EPS, or earnings per share. The simple formula for EPS is the total shares outstanding divided by the company's profit. So if we were to use an example, let's say a company has 100 total outstanding and the profit/net income of the company is 1,000, the EPS would be $10 a share. Now let's say the company decided to buy back 10 shares. The total outstanding is now worth 90. With net income being 1,000 still, EPS will be $11 now. So with those shares being taken away, you now own a larger part of the pie than you did before. This is also popular with executives as it drives greater share price, which can improve their share options. And this is one of the main criticisms of buybacks. When comparing the chart of business investment, we can clearly see the trend is nowhere near the same level of growth as buybacks. The one who decides what they want to do with this cash are often the ones to benefit. Now, another concern is corporate debt levels. Debt has been expanding ever since interest rate levels have been at some of the lowest over the multiple decades. This could be called cheap debt as interest is low on these repayments, and this could be a cause for concern as some companies have taken this out to execute buybacks to inflate their share price. And with current uncertain macro headwinds, this debt could be rolled over at higher interest rates, which could create future problems for businesses. To add, companies will look at the opportunity cost of their cash to determine where this is most beneficial. If a company's stock performance has been poor, as an example, Meta, executing share buybacks at lower prices to help realize what the company believes is its fair value can also be beneficial when raising equity through share dilution at a much higher price. Furthering this, if a company believes that using their cash on research and development isn't going to get their return on invested capital at a good rate, that can be another reason to execute share buybacks. Now, some say buybacks are overstated and often offset share dilution rather than inflating share price and encouraging corporate greed. Warren Buffett, in his annual letter, stated rather crudely in his wording to White House officials on the topic, stated, "When you are told that all share purchases are harmful to shareholders or to the country, or particularly beneficial to CEOs, you are listening to either an economic illiterate or a silver-tongued demagogue." While the White House representative stated back, "You've got it wrong if you think President Joe Biden sees all stock buybacks as bad." This all comes after the US government imposed a 1% tax on buybacks last year, and the president came out in support of raising it to 4%. But Biden isn't an opponent of share repurchases. He just wants to encourage smart spending, says the White House officials. Now, I'd love to get your thoughts and perspectives on this topic. Where do you side in this? Leave a comment if you are team buyback or team tax or undecided. If you like this video, make sure to subscribe, leave it a like, really helps out, and I'll see you in the next one.